And also in Egypt, see, the country attracted a record 15.7 million tourists in 2024, surpassing the previous year's record of 14.9 million tourists. And that's according to the Tourism and Antiquities Minister. He ascribed the record to the government provision of security and safety for tourists, as well as support for the tourism and antiquities sectors, following years of pandemic-related challenges, which saw tourist arrivals that dropped to about 3.6 million in 2020, 8 million in 2021, and 11.7 million in 2022. The sector has rebounded and surpassed pre-pandemic levels. Meanwhile, the passenger traffic at Egyptian airports that rose 9% in 2024 compared to 2023. And now to our next conversation. Iron ore, a crucial commodity for steel production and vital to infrastructure development, has seen a price roller coaster in recent years. Following a surge during the Russia-Ukraine conflict, prices have declined significantly. Now with the EIU projecting a 5% increase in steel prices in 2025, driven by anticipated Chinese demand. Let's explore the potential now of the impact on global and Nigerian steel markets. Join us now, we have Tomiwa J. as an analyst, financial derivatives company. Great to have you, Tomiwa. So, given the current volatility in iron ore prices, how will this impact the profitability of steel producers in Nigeria and globally?
Yeah, good afternoon, Ladi. Thank you for having me. Yeah, as you said, we've seen a roller coaster in the prices of steel over the last 2 or 3 years. I think when the Russian-Ukraine war started in 2022, prices went high, very high, about 70% to a peak of $159 per ton. And reason because Russia is one of the top global producers of steel and iron ore. Iron ore is crucial for steel, and steel is crucial in real estate sector, in civil construction of bridges, houses and roads. So we've seen that interlink between the prices of iron ore and steel. And so now that the Chinese demand for steel is declining, and the Chinese demand is better because they account for 50% of total steel supply, 50% of total steel consumption. So in the last year, we've seen Chinese demand in Chinese wane because they have a declining population, and meanwhile they have a lot of investment in their housing sector. So now the demand for housing is falling in China. The demand for steel is also falling in China. So steel prices have been down basically, and why the EIU is expecting the steel prices to go up in 2025 is just because they're expecting a lot of goods from other countries. But basically, in the near term, steel prices are going to be down. And what that means for Nigerian steel producers is that being that Nigeria is a net importer of steel, we might see lower costs to acquire steel for our real estate sector, especially the exchange rate remains stable. So expect steel prices to remain low, and that would also help to ease inflationary pressures in the country. That will also help to boost infrastructure projects in the country, because now they're getting steel at a lower price, and that reduces the cost of construction of bridges and roads in the country.
So how will the potential slowdown, in the Chinese real estate sector, affect the global demand for steel and, consequently, iron ore prices?
Yeah, so what's happening now, what EIU has outlook is an increase in price in 2025. We've seen that over recent years, we're seeing more demand from other countries apart from China. So in 2024, despite the downturn in the Chinese market, still demand for steel was only down by 1%. And that's because other countries such as India, their consumption or demand for steel increased. So going forward, now that inflation is coming down in most of the countries, and we expect interest rates to come down, we expect to see increased demand for steel, because now there's going to be more investments, infrastructure investments, and investment in these other sectors that require demand. So what the EIU projects is that by 2026, the share of steel demand from other countries apart from China will actually rise to about 52%, and that will be the highest since 2018. So we're seeing a shift from the Chinese dominating the steel market. Now that there's a downturn in their property sector, their demand is falling, and we're seeing an increase in demand from other countries. So those are the ones that are going to underpin the demand in growth for steel in the next 2 or 3 years.
Well, what would you say are the potential risks and rewards for Nigeria, in pursuing domestic steel production?
Yeah, so Nigeria has we have a lot of iron ore deposits, and this iron ore obviously is what can be disposed. 90% of iron ore is basically used for steel or manufacturing, but so far in Nigeria, we have the Ajaokuta steel plant, which has not been functioning for a long time, and there have been many plans to revive the plant. But again, in the recent year, there have been a lot of activity in the mineral sector of Nigeria, The Russian consortium is expected, they are the ones right now that we expect are going to help revive the Ajakuta steel plant. The Chinese, there are some Chinese companies also working with some Nigerian companies for a new iron ore to steel project in the country. And there are also some conversations with Saudi Arabia to see how they can help to develop our iron ore extraction and to also help to transform to steel. So if we see those projects actually come into fruition, that's going to be a plus for the economy because Nigeria has a huge infrastructure deficit. So if we begin to produce steel at scale, that's going to reduce the cost of accessing this steel, and then we can be able to increase the production, the building of houses, infrastructure projects such as road and railroad. And again, if these projects come into play, since it's going to be in the manufacturing sector, it's going to be labor intensive. So it's going to help to improve employment opportunities in the country. It's going to increase job opportunities. And again, we cannot forget the export potential too. By the time Nigeria start producing a lot of steel, taking advantage of our rich iron ore deposits, we're able to get a lot of foreign earnings, which will help the country in terms of the naira stability. But a key concern is that in Nigeria, there are a lot of policy announcements without good effective implementation. So we have to watch out for that. And again, steel plants are very energy intensive. So they are going to require a lot of energy. There's going to be need for cheap, accessible, and constant power supply if we really want to be able to benefit from the steel, from being able to produce steel.
Right. Well, so much to unpack there. And definitely, we need more of those policies to be fully implemented. Thank you so much, Tomiwa Ajewole, analyst at Financial Derivatives Company. Thank you.
Thank you.